There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com. Technical analysis made easy, a starting place for new traders. When do I place my trade? Where do I set my stop loss or profit target? All good questions that traders need to answer on a regular basis. One of the ways traders get to those answers is by using technical analysis in a historical price chart.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy, metal, crypto, and more futures markets, and access over 40 built-in indicators plus custom indicators, all from your phone. Stay up to date at all times by enabling notifications. Get started today at NinjaTrader.com.
Join over 800,000 users who trust NinjaTrader as their futures trading platform of choice. Access the world's most popular futures markets and trade seamlessly across devices, including PC, Mac, or mobile. Get started with $50 margins and commissions as low as 9 cents. Need support? We're available 24 hours a day, 5 days a week. Want to personalize your trading setup? Connect with our ecosystem of third-party developers building trading indicators and more. Visit NinjaTrader.com to get started today.
Welcome back to NinjaTrader Live. I'll be your host for this part of the segment. Tom Schneider, CMT with NinjaTrader. This is Traders Workshop, where we like to bring in our ecosystem vendors, and today's no different. We have a repeat offender on today, Tiru Nagapan. Tiru, how are you doing?
Very good, Tom. Is glad to be back again to serve your viewers today.
Yeah, my pleasure to have you back. So how have you been? It's been a while since we talked.
Yeah, everything is going great. We are analyzing all of our monitoring our trading systems, personal life. Yeah, we just had my little one just turned 1 year. We had a birthday party and everything. Gavin was there as well, so we had a really good time. It was nice and sunny too. So next thing we're looking forward is to having you over in nice sunshine.
Yeah, that's the plan. I'm going to see if we can make it happen. But you know, that 1 year goes by so fast with your your firstborn. It just doesn't stop. It doesn't slow down.
Tell me about it. Yeah, I know.
It's I think we celebrated our firstborn's first year 20 years ago, and
wow.
It seems like in a lot of ways seems like yesterday, but lots happened since then. So enjoy these times. That's all you can say, right?
Definitely. I'll take it from the experienced one. Definitely.
So I'm looking at a great set of charts, but I want you, before we get into the charts, I really like the way you approach the analytics of the charts. Your systematic or logical approach isn't cold logic. I would say it's very smart logic. And can you just explain, how you came to trading, how you approach trading, and how that comes out in your indicators?
Yeah, I'll just give a quick recap to people, and then I can reference some videos as well, as well. I think my background came in cardiovascular pharmacology, Tom, as we spoke before in our first interview. And after that turn of events, I got into finance, and a lot of research analytical skills from the pharmacology days. I've applied that into trading. And a big turning point in our trading actually came when we met quant traders by chance. But as we all know, there's no such thing as by chance or by accident. As everything happens for a reason. So when I met these institutional quant traders is when my trading took to another level, and what we got today is a large ownership to them, really, but they taught us the formulas on how to look at the markets. And the way they look at the markets, Tom, is just mind-blowing. You will never hear it anywhere online or in a book, or even when I spoke at the STA as well, I referenced them too. Yeah, it's just mind-blowing, and that's what we got today, and the whole thing makes sense as well, just like you said. It's very logical. Those are the main things actually that carved our part in our trading career. We worked in a trading floor for a bit, for about 1.5 years. We left that, and we set up our company, MasterTheMarkets. It's been going on for more than 14 years now. 2010 we started it. Yeah, so that's where we're at. And along the way, of course, we met Gavin Holmes, CEO of TradeGuider, which you guys also showcase, and he introduced me to you guys, and we got both the price and volume methodology combined together about 2 years ago. So yeah, so that's how everything came together.
That's great. And congratulations on 14 years. It's not anything to sneeze at, right? I mean, staying in business that long, and certainly in the markets, it's sounds like a thing of love right there, a passion, that you can keep doing this. And certainly at the time you came in, right? Came in after the great financial crisis occurred
Yeah,
in
you remember? Yes, that's
2009.
right. Yeah.
Yeah,
Tell me about
so
it.
it can be discouraging with that volatility that was there. But I'm interested to know a little bit more about kind of the methodology. I really like the statistical analysis and how you apply it here.
Yeah, so let me just give a breakdown for the viewers. I think just reference a few videos that we did. I know maybe Jim doesn't like this. Our epic interview, 25,000 views so far, 3 critical stats. That was the first one that we did. Over here, actually, just to recap for the viewers so that I can give some more new information today. This is where we looked at the framework of the market. And basically, we looked at the tops and bottoms quantification, and how from there we can get 3 critical stats. Then the one that I did with Jim after that, where we looked at the market structure. And the market structure video here, where we looked at, I mean, to be fair, he's doing very well actually, 11,000 views in 3 weeks as well. So in the market structure video, in the one that I did with Jim following on from yours, we looked at the trend. How do we define the trend and the phase before we get into a trade? As I explained in this video, we talked about there are 2 things critical for a strategy, regardless whichever strategy that you do in the world. One is always having a bias of direction for the day. Are you going to go long or short? Or are you going to just sit aside, not do anything? And the other thing is timing. When are you going to get in? Right? Is it based on a pattern based system, or is it going to be based on indicators, or is it going to be based on any other parameters or volume? What is it? What is going to determine that timing after you've decided direction? And a critical thing, we believe that as part of the market structure framework, defining trend and phase as the first step is very important. But however, if you don't have a framework, which is what I explained in this video and with yours as well, then you can't get this in a decisive, systematic, methodological way. Now, once you've got that, the direction and the timing, then to put in your exact entry setup where you're going to get in, your stop loss and your target, then what we have talked about, the 3 critical stats can help you with. That is a kind of a summary of so far what we have covered, Tom, in the last 2 videos. And today I thought it'd be good to go through how do you actually look at getting out? Because getting into a trade is good, but where do you exactly get out? In fact, a lot of traders in a lot of interviews, especially the Jack Schwager Market Visit series books, some of the traders tell you, you know what, or even some people who have even run so many computer systems, they tell you you can have a random entry. Just put a line anywhere on the chart. But what really determines whether you are making realized profits and whether your realized profits are big enough to override the losses and make it a net profitable strategy is actually your exits. So that's an interesting thing to really reflect on.
Right. So let's talk about that. The exits, 2 types of exits, right? Your targets and then your stops. Your targets being, you have to kind of be informed of, okay, if you have a bias on the day and you expect a direction, where are we in terms of that direction? Are we in a move in the direction or not? And how far along has that played out? And then, of course, the stops are kind of the opposite, or I shouldn't say opposite. They're a little different. It's how much risk. There's a little bit more risk management, because, of course, if we could, we'd let our profits run as high as we can, and we'd want to cap our losses to some degree, right? And finding that balance of where to put that stop in to allow those profits to run, but we have to be realistic. So, 2/3 of a trade is not just where you get in, aside from getting in, is where do you get out? There's two stops. So, interesting to hear, where that is for you, or how you determine that.
So, Tom, so following on from that, as you said, you've got to give it enough room to also let it move to its target. So how do you get all these things together, the parts of the jigsaw piece puzzle, to really create your strategy to get to your targets? So in today's one, we'll go through more on targets. So I got the daily chart here on the gold futures. Now, everything I speak about, like in previous interviews, you can do that on any time frame. The principles are all cross-transferable. So for a large time of my trading career, before I met the quant traders, the institutional quant traders, and my mentor trades for Morgan Stanley's money, and now he's getting more money from the Middle Eastern side as well. Now, what they taught me is that, and I read in a lot of books, everybody says trading is probabilities, and you would agree as well, right? And referencing Dr. Gary Ganton's interview just now, he said, and what Mark Douglas says as well in Trading in the Zone, he says, every trade, right, they look similar, because at the end of the day, it's just a bar, right? You're going to get the trade. They all look similar, like snowflakes, what I quote Dr. Gary just now. But one of them, but even though they look similar, but finally, when you enter the trade and towards the exit, some of them are very unique, right? Each one of them has got a unique outcome. Some of them are your biggest runners, which just pushes your equity curve to the next level, whereas others are not. But because they're all white coated in the beginning, like snowflakes, right? They're all similar. So you don't know which one is going to be the big runner. So you're all starting with the same kind of feeling and thinking to treat them all equally, but knowing that each one of them is unique, right? And based on probabilities. So for a large time, I always thought, hey, everybody says trading is probabilities, but no one is showing any numbers. It was very hard to get, like hardcore numbers and stats and everything that are sustainable, scalable, and reproducible. Until I came across the institutional quant traders, because before I go into the target part, I just want to let viewers understand that probabilities, in its most simplest form, is based on 2 numbers, right? One is you need to have a numerator, and then the next is a denominator. Now, the denominator is usually your total sample size, right? And the numerator is usually the trades that qualify with the criteria, right? The eligible trades. And based on that, then you get divide the two, then you get a percentage. Now, then another deeper question that comes out of that is, hey, hang on a minute. I mean, but if I want, okay, anybody can create that and just pull out numbers from the air. But the most important thing here is to ask ourselves, when we get that probability, what gives me the confidence that it will sustain and reproduce itself? What makes it valid? So that then I can generate my profits, consistent profits and consistent trading performance. So when you get all of this, you come down to the same point again, and then the search will begin, which is, how do I first get a solid market structure, which is what we've spoken about before, and a solid market structure, right, that you can then apply volume and all the stuff that I got here from also the VSA, the trading trade guide, the team over here as well. A solid market structure first begins with a quantified tops and bottoms. You need to quantify your tops and bottoms. That's what we got here, the blue arrow and the blue dot. So that's the confirmation bar that confirms this bottom, which we spoke about in the previous video. I don't want to go too much into it. They can reference the previous videos. Now, once you got a solid market structure, from there, Tom, as we have mentioned before, wherever my point of entry is, I make that consistent, which I've spoken in other talks as well, especially in Society of Technical Analysis. Then I can also get my consistent point of exit, which is based on the maximum point, which is on a bottom, on a buy signal, the blue dot, and the maximum it reaches is the red arrow, right? Maximum point reached. That's why the quant traders, because the way they think about the markets, they give the formula. The formula for open equity or to decide where your target is 2 points. Point of entry to maximum point reached, right? So once you got these 2 points, I can keep measuring the distance from each move. Imagine each one is a runner, which is what we spoke about. And I consolidate all that data together and analyze how much does it move over a period of time on an average. So at this point, so coming to targets and exits, I'll show the viewers here the table that I just put together. I put some tables together. I didn't get time to type them out, which you can get from the NinjaTrader platform, which we have all coded in and everything once they get the framework and the indicator. So over here, I got the open equity data, right? This is on gold futures. Now, this is over like 10 years of data, okay, that we have done. So over here, what you can see, 50 here, just to get the reference point, 50 here basically means 5.0, right? Like a $5 move. So over here on the right-hand side, 1,000 refers to 100.0, okay? So $100 move. So the three numbers, what my mentor used to tell me is, look at your 80% number, which is about $5 in gold, right? And we can get all this in ATR format as well. I'm just showing it in raw data at the moment. So so he said, look at the 80% number. So what does that mean? That means if I go back to here, if I enter on the dot, right, wherever the bottom or top is confirmed, yeah, it will move 85% of the time. From the point of entry, usually we take on the close of the bottom. That's our point of entry, where we lock it in, right? So that it's got a stronger chance of reproducing. So from that point of entry, you add $5 on top. That's your first, that's one of your strategy's exit point. So strategy one, you can build something where the exit point is very small, just a small profit you're getting, right? But which will win 85% of the time. So for example, even in this, the last signal we got was here. So if I were to take a look at that, if I get the crosshair out, so if I look at that, and that's about 2374, isn't it, roughly, right?
Yep.
50. So if I do $5 on that, that'd be 2379.50.
So Tira, this is
Yeah.
kind of I'll say easy way to look at it, right? Because once you get that entry signal, you've got a target. You've got a target based in price, and so you're really concerned about what percentage may hit that price, and there's no real I don't know if there's no real management, right? I mean, obviously there's stop management, but there's no real looking for another signal, or you're in this for X number of bars. It's just, hey, you know what? 85% of the time when we get this signal, price appreciates by $5.
Correct, spot on. I'll come to the trade management in a minute, and what you said about how does it get there. Let's go into that a bit more deeper on the other stats that we got as well.
Mm-hmm.
So this is the first thing what he said. So it's not that. So he said first create one strategy where it wins 85% of the time. So you're only looking for small profits, but then some people might say, oh, Tiru, but then. But the trade runs much more longer. Why am I getting out much more earlier?
Right.
Right. So some people might say that, but that's when I tell them, remember, this is only strategy one, right? And we're putting one target. It's not the end all be all, and that's it. You're just going to keep trading that only, right? It's just one strategy based on a high reliable winning strategy. And what determines whether this strategy or any strategy in the world really wins is that 85% of the time it wins, it will give you a total gross profit. As long as the total gross profit overrides the total gross loss, we end up with a net profitable strategy, right?
So
that's just
if you were to
one.
back test it, you're saying if you were to back test this, you have to look at all the trades, not just the winners, right? You have to look at that 15%, and you just have to see, okay, is your, like you said, is that 85% enough to overcome your losses?
Spot on. That's right. Yeah, because that's the principle for any strategy in the world. The simplest or the complex, isn't it? The total gross profit got to override the total gross loss. And whether you are a stats guy or not, whether you like it or not, whether you don't look at stats, eventually it's got to play by that, right? Whether you know your stats or not is another thing. But if your strategy is profitable, definitely your total gross profit is overriding your total gross loss, right? So that's the first thing you say. Okay, create one which is very highly reliable strategy, right? Then create one more, strategy two, right? Which is based on the 50% number. Here I will take the 250, which is about 25.0, $25 move on gold, right? So whenever I enter a trade, I'll add $25, and that should hit it 50% of the time. And finally, he said, do another one, which is getting the big runners, which is the 20% number, which is over here, which is the $60 move, right? Now, so we covered the first part, right, which is the target, but based on only distance. So this is one type of target that you can create based on the stats. And just to remind the viewers, remember, to get to this point of getting the stats, we have to first establish market structure, a solid framework, which can only be done by quantifying your bottoms and tops, which the quant traders ran formulas and they found this to be one of the best ones, right? And once you got your market structure, the bottom and tops quantified, you can then define trend from it, which what I spoke with Jim. You can define phase, and you can also get the three stats, which I'm showing you here, which I've just covered the first stats, which is the open equity side of things, right? For target placement. So this will help you roughly on target placement. Some people might say, Tiru, that's all good, but I've seen some which run more than 60, right? To the moon, right? And of course, then you're talking about more stuff like this on the right-hand side of the table, which only happens very few times, right? 10% of the time. This is what also, when you look at stats, it manages your expectations.
Mm-hmm.
The problem with most traders is, if they were lucky to capture $100 move, they would just think, you know what? That's it. I've nailed it. Every single trade is going to be $100 move, and it going big, right? That's what Dr. Gary was saying as well. Once you've won, your confidence goes up,
Right.
and that morning you just think, yeah, let's go for every snowflake is going to be a big runner, right?
And that's because you identified an entry that did that, and if you identify the same entry, you expect the same results, which isn't always the case.
Exactly. And the stats, sometimes just even taking a glance at some stats, you're not a big stats guy, but taking a glance at some stats manages your expectations.
Mm-hmm.
It tells you that, hey, you know what? I've caught a big runner, but that only happens 10% of the time. You know what? Let's preserve my profits. And I know they don't happen all the time. And I've been lucky, and I caught that. So that's how you hold on to your profits, right? So all this really helps you. And you can define different strategies as well. Sometimes, based on this stats, you don't need to set a target, but you can just put the lines there at $60 and observe how it reacts. If it shoots past it, then hold on to the trade. That's what we do on some strategies,
Mm-hmm.
right? So this all gives you a guideline. It's not the end all be all that you got to design a strategy like that
Right.
and that is it, is rigid. No, it's flexible. It gives you the guideline and the framework. That's what it's called, a framework, right? And it definitely gives you some guidelines. But for some people, you know what? One of the things I learned actually, Tom, in actually trading and in investment is the biggest quality. One of the biggest qualities you can really develop is gratitude, right? If you actually got a strategy tree and you're very good 20% runners, that's all you capture on, right? And your strategy is making profit, you just get better and better at it. I like Bruce Lee's quote where he says, I don't fear a man who has practiced 1,000 kicks, but I fear a man who has practiced one kick thousands of times. Right?
That's good.
Yeah, so there's different ways,
That's
it's
good.
just that traders have to just get to know what they really want. Now, the second type of stance, this is based on stop loss. I'm not going to go through too much of that because I think we covered it in our interview together. But this tells you to manage the volatility so as to give it room enough to get to our target, which is what we spoke over here on distance. Where do you place the stop loss? In gold, we can see that if you don't want to get stopped up 98% of the time, place your stop loss $40 away from this framework, which tells you where the point of entry is. The point of entry over here is locked in, which is anytime the blue dot or the red dot comes, it's on the close of the bar, right? But at this point, I also want to mention to viewers is that this is not a buy and sell signal. What this is a framework, but your skill set is in which of those dots are you going to trade? Selection, right? And in Jim's interview that I did, I said a simple selection that you can do, if you want to make it really simple strategy, only choose the trades which are in alignment with the trend. So if you got an uptrend like what we got right now, I'll only choose when the blue dot comes because then it's in alignment with the trend. It's a bottom to top move, it's going up, and it's in alignment with the trend. The other part here, which is the pullback, or people say, when the market is breathing out, I take a sit back, I recharge myself, I get really clear on my next setup, and I get ready to go in, right? So
Right.
simple selection is just choose all the phase ones. But to choose the phase ones, you need to define your trend, and the framework will help you towards that as well. So that's that one there. And then finally, I'm just thinking on time here. The time two, right? The time two is the second type of target, what we talk about, and we usually look at the 80% number. So what this tells us is, over here, I've put a constant target of $25. I took the 50% number, right? And it will get to the $25 within 10 bars. So on a daily chart, that's within 10 days. So after 10 days, if it's a slow runner, if it's huffing, puffing, getting a bit exhausted, with all the seller bars coming into play, what do? I can trail my stop loss tight because it's showing a sign of a loser, right? So that's what this second type of target, which is based on, is time. So one is distance, the next thing is time, and the third type of target, which is what you kind of mentioned as well, Tom, is what we call a live exit. And the live exit can either be, or I think there's one more actually as well, as when your trailing stop loss gets hit, or the other one is where you get a live exit according to the framework. Now, this is the amazing thing about this framework, which is, think about this, right? Because once you get the blue dot, the point is, if you want to do a live exit before it hits my target, let's say $25 is here, right? But it didn't get there to the finish line, and then it did that, and it finished this race by a red dot. That's the end of your race, isn't it? Because as a swing trader, what are you looking to capture? You're really only looking to capture, in an uptrend, only this part of the move, which is the bottom to top. So once the top to bottom begins, that's your end of the race. You get out. So I get out. A live exit will be based on the opposite confirmation bar.
Right. And that's because the trailing stop might not catch it. It might not have trailed up. You might not be
Spot
trailing it
on.
yet. But it's a change in situation
Correct.
where your paradigm has shifted. Tiru, we could go on for another half hour, I'm sure, but we've run up against time. Let's finish the thought though. You have these, putting it all together is you have expectations of price, of time, and how much stop to give. I think that's really those three points we considered, right?
Spot on. That's right. Yeah. Distance, time, and a life exit. And also I talked about the stops as well.
Yeah, I think it's great. I think that it's great the way you've put it together. Um, we're looking at your screen right now, or if we could bring that back in, let's take a look at your website, Master the Markets, and what else, how else can people find you? Do you do anything on the socials?
Yeah, I think the main thing what I would say if they want to go deeper into the framework and everything and make sense and logic and they can apply it to any markets along with the volume as well, because we've done a lot of stuff with Gavin. I haven't had time to show that properly today, but you can find it all at 7steps to ctp.com, right? And all they got to do is put their name, email address, and number they want, and they will get the 7 video series just like this over here. It shows you. And if you guys can put it on the YouTube chat, that'd be good for the people to come in and find out more about this. It will really help them in any kind of strategy that they do. The framework is quite solid, and it's sustainable, scalable, and reproducible.
Awesome. Thanks, Tiro, so much for coming back on Traders Workshop on NinjaTrader Live. And we'll be back with you, I'm sure.
All right. Awesome. Yeah. I really like it. Thank you.
Hope to see you live in person real soon. We still have to figure things out here at Casa Schneider, but yeah, hoping that happens sooner than later.
Yeah, pleasure to serve you guys once again. And I think we got another one in 2 weeks, so I'll see
Exactly.
you then.
Yep. We'll see you in 2 weeks. Happy birthday to the little guy. We're going to take a quick break, and we'll be back with Mike Burke to wrap up the midday show.
So, you want to be a trader? Well, you should know you're not alone. Over the past several years, record numbers of people have set up their very own online trading accounts. There's never been an easier time or more inexpensive way for do-it-yourselfers to get started trading the financial markets.
Better futures start now with the NinjaTrader mobile app. With the power to customize how you trade on the go, you can quickly and easily place trades with a single swipe and view index, financial, energy,